Hello traders, welcome back to our channel. And today guys, I'll be teaching you how to set a stop loss using Fibonacci retracement based on the time frame which you are using. So in this strategy, I'll be using a weekly time frame, and I'll be using Fibonacci based on time. I'm going to teach you about Fibonacci based on waves, so that you can implement both strategies and see in other currencies. So guys, I'm going to be teaching you about Fibonacci at the same time, risk management or placing your stop loss, a technical stop loss, because what many people do, they place a stop loss based on pips. Guys, a stop loss, it must not be placed based on pips, because rather rather decrease the lot size to meet your stop loss, right? I hope you guys understand me. Rather decrease the lot size to meet your stop loss. If the distance, the pip distance is bigger, decrease your lot size, because your stop loss position is not going to change, guys, because immediately you place you change your stop loss and make it tight, it might happen that you get stopped out, right? So let us look at stop loss based on technical analysis, which is very uh, a useful strategy to minimize the risk, right? I'm on my weekly time frame. In this case, guys, if you have not watched my videos and it's your first time seeing this video, make sure, guys, because it might happen you don't understand some of the stuff. Make sure that you watch my previous videos on the same channel about Fibonacci. You will see how we place it and all those stuff, because now I'm going to be teaching about the stop loss and all those stuff. And don't forget to subscribe for more videos. So in this case, guys, we I told you that on our previous channel that our 50 and 38.2, it's a strong levels when using a bigger time frame, right? So where are we going to put our stop loss if we had to enter, or let's take we had to put a pending order for sale, if we had to place a pending order for sale, or just an instant execution? Where are we going to place our technical stop loss? Not just a stop loss, because a stop loss based on pips, it is not a normal stop loss, because it's based on pips. And it might happen that on the or your stop loss, it is below a support or a resistance, right? A certain resistance. So we have to put our stop loss based on a technical. So when using a Fibonacci, how can we place a stop loss when using a Fibonacci? And this strategy, guys, is for weekly. Stay tuned for my risk management strategy based on daily. I will also upload that video. So how should we place our stop loss? We know that at 88 we are not going to lose the opportunity. We are looking to enter, right? And at 50 the market started testing that point and then started going down. Let's take we sold here at 88, right? Or 50. Where are we going to place our stop loss? Okay, we must place the stop loss, guys, based on the allowance, right? Based on the level which the market does not normally reach, right? So we will place our stop loss based on a level, whether if that level is broken, it means that there's a change of direction, right? If the level is broken, it means there's a change of direction. So that's where we are going to place our stop loss. It means that immediately that level is broken, it means that the trend has changed, or we have to take another decision, in this case a buying decision, because now we are looking to sell based on Fibonacci. And if you don't understand some of the stuff, subscribe to the channel and check my other videos, guys. I explain all this stuff on my other videos. So in this case, we are looking to do what? We are looking for our support resistances. We know that at 61.8, the market does not reach there on a weekly time frame. If it reaches there, we know that it might happen that the trend has changed. It means it's a buy. We should look to buy. So trading a support resistances, guys, as long as you use proper risk management, you don't stand to lose a lot, because if it's a breakout, we are taking a buy decision, right? If it's a bounce, then we are going to make money. But it's a breakout. Let's take this market breaks here. It means that we are going to buy and go up. So let me remove these lines. Already we have inserted our vertical, our horizontal line. Uh, this line represent our 61.8. I can change the color also so that you can see. it represents 61.8, a normal level which the market does not normally breaks when in a bigger time frame, Fibonacci, right? So if we sold here, we are going to put our stop at least above the line, right? So at least above the line, which is almost 200 pips. So if it is big for you, or the pip difference is very huge for you, it means you decrease the lot size a little bit. Uh, but the stop loss, it must not change, guys, because if it changes and you bring it closer, it might happen the market did what it goes up and then touches your stop loss. So that's how you place a technical stop loss, not just a stop loss based on pip level, or based on what you don't want to lose. This is a stop loss based on technical. So make sure, guys, that you place a stop loss based on technical analysis, not based on pips or money which you cannot afford to lose. At the end of the day, you will lose it, right? So it will give you a certain discipline as long as you do it like this. I will do another example on this, guys, but on this previous week, so that you can understand some of the stuff, because I think 2 examples are enough for people to understand. Until next time, guys, don't forget to subscribe into this channel. Until next time.